Hey everyone, it's a day later than normal, and truthfully, because of the long holiday, President's Day, it sort of slipped my mind that Tuesday is my live stream day. But hey, we've got a bumper live stream issue this week. I want to make sure I get to all the things that I mentioned in my intro, which is that there is a crazy amount of insider selling going on in all of the things that, have gotten super hyped that I'm pretty sure a lot of people are in. And even if you're not in directly, meaning like, you own the single stocks, you're probably in through the S&P 500. So like I've got X posts, which used to be called tweets, showing that, Bezos has sold $8 billion worth of Amazon stock, I think, in the last couple of weeks. We've got Bill Gates selling, we've got Buffett selling, we've got Zuckerberg selling. Yeah, maybe it means nothing, but I don't know. All right. And Nvidia reports their earnings today, and their CNBC's running like a counter, a clock. This just screams of 1999. This is the way there was like a mania, in that time. And then, okay, I'm gonna segue from like that into last week I showed you these, I'll call sell high, buy low portfolios. Essentially, the idea is long, short, pair trades, whatever you can call it. Give you an update on that. All the way in October, I did an acronym portfolio called Pumped, which was Palantir, Uber, MicroStrategy, PayPal, Exact Sciences, and 3D Systems. Going to give you an update on that. An update on the Bitcoin ETF, because there's a lot going on. Money keeps flooding in, just like hoovering up Bitcoin. And one more update on a old video quickly. This is from May of 2023 on the number one Risky Biotech. Stock is up a lot since I made that video. I just want to give you an update on it. But before I do all of that, let's quickly go through all of this, which is I skipped one. The important one. This live stream and the content from ATG Digital Media is not investment or financial advice. It is presented as opinion, information, engagement, and hopefully entertainment. Always, we want to entertain. All ATG Digital content may contain errors, oversights, and mistakes. And understand that investment operations, which are what? Buying, selling any stock, crypto, doing anything like that, have significant risk and can lead to the loss of your principal. What does that mean? Well, you can lose your money. All right. So you got to think of that before you choose to do anything, based on anything that I say in this live stream. Next, the owners, employees, contractors of ATG Digital Media own, trade, transact the securities I mentioned in this video, and all content from ATG Digital Media. Very rapidly, these are like all the free areas where you can get my ideas, my content, my opinion, my viewpoints on investing. If you go there, and then social media. I'm active on X doing videos. I don't quite do it quite as often as I do them on YouTube, but I'm on there. And oftentimes it's, I don't know why. For whatever reason, X seems like the place to go and do immediate updates. So follow me there. We also have a pretty active Facebook page there. And I often forget to do this. But if you are interested in paid subscriptions, atgdigital.media is where you would go to get that. All right. Let's very quickly go to insider selling, right? This is like, look at this. So Bezos, 14 million shares worth another 2.4 billion. And that's, if you'll see in the comments there underneath, that's up to 8.4 billion. And let me see if I can switch from that one to this one and make sure that it goes through. which is that, okay, that didn't switch, so I might have to end and do this again. But yeah, so Bezos, what about here? Bill Gates. Yeah, Bill Gates, he's selling, reduced his portfolio by 65%. Bill Gates, folks, is a big investor. I mean, he's always in and in the market. So I mean, this is notable. Okay, let's go to the next one, which is oh yeah, Buffett selling Apple. I mean, people are like, he's just trimming. I'm like, yeah. I mean, Buffett was talking about Apple being like, something that he would own for the foreseeable future. What is this trimming? I mean, so last one that I'm going to bring up before just generally talking about this is what is going on with Meta. And yeah, once again, we see the same thing, which is yeah, there's persistent selling that is going on for all of these stocks. And generally speaking, for a lot of these big tech names that are huge in the S&P 500. And my best guess is that for folks who have bought in either a long time ago, if you're a very shrewd investor and you were buying in 2008, 2009, you're probably a seller. And then there's probably all the latecomers that missed out on the bull market from 2009 all the way until probably 2021 and have seen, these last couple of years as a reason to pile in because it feels like you can't lose. And, in last week's live stream, I mentioned that this is really what makes me feel like for various groups of stocks that I mentioned last week, which is what? Big tech, which would be the Mag 6. So Apple, Amazon, Meta, Google, NVIDIA. I'm missing one there. Microsoft. Yeah, I mean, this looks like a huge top like it was in 1999. Another group is the semiconductor stocks. I mean, there is a ex-post of a guy that I follow, and he has this like picture of a train. I think it's from India, like from where I'm from, where people are just piled up on top of the train, and he's like, this is like retail investors, piling in at the top for semiconductor and chip stocks like Nvidia, like SMCI, like many of the others. And as you know, I mean, what was my very first recommendation when I was at Banyan Hill was ST Microelectronics. So, I mean, this is a sector that, I have followed and known, and is my opinion and my judgment that like, yeah, I mean, insiders, market makers have used the hype around artificial intelligence to essentially mark these stocks sky high, and they are distributing this out like, yeah. So, hey, I mean, I have no idea what NVIDIA is going to report tonight. I know people are like, hey, Paul, what do you think? Are they going to beat? Are they going to miss? I have no idea. Something's going to happen one way or the other. However, in our platinum tier portfolio, where we can, buy call options on inverse ETFs. In other words, where we can make positional trades. Yeah, I mean, we have, option trades, which, full disclosure. Yeah, I mean, they bet on, these chip stocks. My experience is that you want to sell them when everything looks great, and you want to buy them when, the economy looks terrible. These things look terrible. In 2016, yeah, ST Microelectronics looked terrible. NVIDIA looked terrible. Truthfully, all of them looked terrible. That was the time to buy. And that is my experience from, being in the markets for 30 plus years. Cyclical stocks like semiconductors, housing, you buy when the economy looks terrible. You buy when the sector looks terrible. They look like they're going to go bankrupt. Every resource report is telling you how awful they are. That's the time to buy. And the time you sell is when it looks glorious, when the sun is shining through every window and every report says, oh my goodness, this can go to the moon. Yeah, but they've already gone to the moon. Anyway, I will use that moment because I just want to repeat the same thing that I said last week. Check into my live stream last week. I talk more, about, that these groups of stocks. Yeah, I'm big tech, semiconductor stocks, cyclical stocks in general. I'll throw housing in there. So definitely commercial real estate. Many of these dividend aristocrats. I mean, there's just been like bid up like crazy. Safety stocks like Berkshire Hathaway, etc. These are all crazy bid up high after 3 years when, yeah, I mean, all of that supply that, that people sold, was taken in by market makers, in my opinion, judgment, and then they've marked them higher over the next 3 years between 2021 and now. Chip stocks were marked up based on artificial intelligence. All these dividend stocks, et cetera, safety stocks bid up on the idea that, yeah, the Federal Reserve raised interest rates. There's going to be a recession. There's going to be doom. There's going to be a depression. So buy recession resistant, buy safe, buy dividend. And, they've marked them up. Just remember, folks, it's a market. And they will sell stocks to you using various tactics that, is not that dissimilar than any other market, right? I mean, sometimes we forget because the psychology of prices is that we want to experience gains, right? And the insiders know that. The market makers know that. They get it. You want gains, and they will give it to you. But the trick is to try and keep them. And so, yeah, I mean, you can see insiders selling, huge valuations for any of these companies. Let me put up this portfolio tracking. Yeah, this is where, well, that's the wrong one. I think this should show the right one. Yeah. So last week, I was going to increase the size of these so that everyone can see them. Based on these observations, I suggested various portfolios where the idea is, from institutional trading. Now, if you're at a fancy hedge fund, you've got to earn your keep, right? I mean, because people give you money and, and the number one goal, if you're in a hedge fund, et cetera, is to not lose money because that will get you fired. The second one is to make money. And so those folks are under pressure all the time. So they're rarely just, buy one thing. They're always they buy one thing and they try and offset it with another thing going in the other direction. So there's there's a buy and sell pull. And so I proposed, was it last week? I might have been 2 weeks ago, that, if you're going long, short, selling high, buying low, based on some of these observations that I made, here are some portfolios that I would consider. Remember, this is not financial advice, not investment advice. But I mean, what looks high today? Well, in my opinion, I mean, if you sold NVIDIA and bought Tesla, that's a good trade. In my view, why? Well, I mean, NVIDIA is a $1.4 trillion company, trades for, I don't know, I've seen some crazy numbers in terms of what the valuations are based on the prospect of AI. And listen, I'm pretty sure that AI will be very, very big. But its value will be distributed among a lot of different companies and a lot of different industries, not so different than the internet. And so, in my opinion, my judgment, AI has stimulated a massive bubble in these chip stocks, which will get deflated. Will it be this tonight? Will it be this week, this month, the next couple of months? I don't exactly know. But generally, you're not going to make money by essentially making bad bets. In other words, it's high, there's hype, there's a bubble mentality. In other words, everybody that's in it alongside with you is in it purely for price. They know very little about the industry. They'll give you some talking point about AI, but they don't know anything about cyclical industries. They know very little about the semiconductor margins and how important those are. And those are the folks who are largely in these chip stocks at these very high prices. So, if I were to look, these are like places. So I mentioned, yeah, so we got uh, Nvidia and Tesla. And then another swap I would do is generally for semiconductors and go into biotech. In my last video, I said biotech is the sector that has the most unrealized potential, sort of like where technology was like, yeah, maybe 15 or 20 years ago. There's crazy good technologies with extraordinary capabilities that can scale up and that can actually address like genuine issues and problems and solve problems for people in society. And so, yeah, that is something that, I would look uh, towards. I don't see my screen updating here, so I'm just going to stop screen and add this again and see if that does a better job. Yeah, I think that's better. I'm not sure if when I scroll, if it does that. But and the last one that I want to mention is, yeah, I mentioned like, dividend stocks, safety stocks. Yeah, I mean, there's a bubble here as well, driven, I believe, on purpose. I mean, it has to be like, a kind of manipulation, deliberate effort to sell these stocks to people based on the idea that a recession is coming, something terrible is coming based on the Federal Reserve having raised interest rates. And so then the idea is that you want to be protected, and you'd go into these super safe stocks, whether it be dividend stocks or these safety stocks. And these have been bid higher, huge over the last 2 or 3 years. Yeah, I mean, it really comes down to the same thing, which is that, yeah, I mean, from very high prices, even an incredibly so-called safe stock, if you're buying it at whatever, 40 times or 50 times earnings and they have no growth, or 20 times sales and they have no growth, yeah, it becomes a speculative stock. And so I theorized like, hey, if I will look back 3 to 5 years from now, what will I wish that I had? Would I wish I had something like MicroStrategy that's bet its business and its future on Bitcoin, or Berkshire Hathaway that has bet obviously its business and its future on kind of like all of those things? Yeah, I mean, those dividend stocks like Coca-Cola. I mean, what does Warren Buffett and Berkshire Hathaway own? They own a lot of that. And all that stuff has been bid up sky high. And then there's $150 billion in US dollars. Yeah, I mean, with inflation continuing to be a major issue, yeah, I mean, I'd rather bet with Bitcoin and MicroStrategy. So those are that's updates on all of those things. And yeah, in terms of performance, now that it's scrolling, obviously thus far Nvidia, Tesla, yeah, that long short, or sell high buy low, is up about 1%. Selling semiconductors to buy biotech, that's up about 5%. And the Berkshire MicroStrategy trade, which was positive in my favor, um, yeah, a couple of days ago. Today, MicroStrategy is down, but yeah, all of these things are generally trending sort of like in the right direction, from what I talked about. All right, I am going to stop that screen there and then go to the next thing, which is that let's see, when I was at Banyan, I did this acronym portfolio called Stuff. And, that turned out to be like a great trade that many folks on YouTube, who probably never subscribed to Banyan Hill at all, took on. And Stuff was what? It was Spotify, Tesla, Uber, and Meta used to be called Facebook back then. And I tracked Stuff for a long time and provided updates, and Stuff worked out great. So it was October of last year when I was like, yeah, I mean, the craziness around um, AI and stuff like that was really getting going in a big way. And yeah, I made this video, which was pumped for these stocks with the idea of creating another acronym portfolio PUMPED, which is Palantir, Uber, MicroStrategy, PayPal, Exact Sciences, and 3D Systems. And the idea was to try and capture sort of like a lot of different themes together. Palantir, AI. Uber is sort of like automation and the revolution, represented by by what I believe is going to be self-driving cars. Some people say that's never going to happen, and hey, they're entitled to their opinion. Just remember, I mean, we didn't have planes before. I mean, self-driving cars versus like flying in the sky. I mean, we have planes. I mean, we can do that. I think we can do, autonomy. MicroStrategy, which is a bet on Bitcoin and sort of like shorting cash. PayPal, which is fintech, and Exact Sciences is precision medicine, and 3D Systems is this mix of reshoring and manufacturing, using 3D printing, which I believe is going to take over the world. I mean, this has been a trade that has been around for a long time for me, but I think about from like 2000 and I don't know, 4 or 5 on, people could see that chips were going to be a big deal for many of the tech trends, and it still took a little while to get going. But obviously, if you held on or you added at low prices and you had a big stack of these companies, what was Nvidia trading for in 2004, 2005? Yeah, nothing. I mean, absolutely nothing. Yeah, it took a long time. And, some people don't have the time, and I get it. It's not for you. But, 3D printing still looks like a genuinely big deal. At some point in time, it clearly, my timing has not been great. But hey, that's going to happen. There's no guarantee in life that, you're going to get everything perfectly right. So, all right. I want to share the performance of Pumped. No, it's not Pumped. Switch it. There we go. All right, there's Pumped. All right, let's just go through the performance of Pumped here. So we've got Palantir, which is up about 27% since we put it into the portfolio, which was on October 10th, which is when I made that video. We've got Uber, which was just added to the Dow Jones Transportation Index. That's up 65%. MicroStrategy, levering off Bitcoin, is up about 100%. And PayPal is flat. Exact Sciences is -8, and 3D Systems is +20. Someone on X wrote me, it's like, hey, Paul, PayPal, what about it? It's been flat for 5 years. And I was like, well, that's the whole point of having a portfolio. I mean, and that's one of the reasons to do these acronym portfolios, is to show people that there is a real purpose and a reasoning to doing portfolios. Number one is that you don't know which stock is going to go up in any given year, really. I mean, like in 2023, yeah, I mean, would you have known exactly what was going to pump early in 2024? No, you wouldn't. You just wouldn't. You don't know which one is going to go up the fastest. You don't know which one is going to go up the most. It's the entire point of having a portfolio. Now, many people want lottery tickets, and they're like, oh, Paul, I want the one stock that is going to go up, this year and the next 3 months and make me 1,000% immediately. Yeah, I mean, the best shot you have of that is to have a portfolio. I mean, the S&P 500, after all, is 500 stocks. And, essentially for the last 3 years, I mean, it's been carried by about 10 stocks. And that is not like a bug. That is a feature of every portfolio. Eventually, every portfolio separates itself, and the highest performers are the ones that carry the portfolio. If you only own one, you picked one of these pumped, And let's say you pick PayPal because it looked cheap. The stock chart looked like this. You're like, oh, I like that. And then you see everything else going up and you get frustrated. But you didn't know that PayPal is going to somehow, magically work out. I mean, it's fine if you want to take that chance, but you got to also accept and say, hey, I'm sitting in this one thing. And yeah, if the others rise before it, you're going to have some serious regrets, some envy, about all this. So the purpose of doing pump is say, it's like, hey, number one, in October, it looked at that time. I mean, the sentiment was crazy negative at the time, and then this I don't know the Fed put out the what was it the plot I mean whatever its comments saying that it might be willing to consider interest rate cuts, and then the market rocketed higher off of that. And now, and I told you, I was like, well, I mean, yeah, they can say whatever they want about interest rate cuts, but like, I mean, it's not like we've rolled back inflation to where it was in 2019. I mean, heck, CPI and TPI, are still indicating, inflation that is, over 2%. And I don't actually believe that it's going to be possible for them to roll back inflation um, to 2019. Why? I mean, if you just think through this, right? Okay. Right. I mean, so prices have lifted by, I mean, anywhere between 30, 40, 50%, depending on what category. And how does that like, happen through the economy, right? Okay. So as the prices go up, then, hey, those get embedded into contracts, right? I mean, if you have a long-term supplier contract, the supplier says, well, listen, all of our prices have gone up. Yeah, I can't sell it to you for what, I used to sell it to you for in 2019. You need to pay me. So they get locked in, right? Okay. So as that gets locked in, then, salaries have lifted higher, that gets locked in. And then from there, our mindsets are like, well, that's now the new base. Nobody is going to come back, not the supplier, not the employee, not anybody is going to come back and say, hey, I really would love to go back to the prices that I was getting in 2019, which are 30% lower, that are 50% lower, that are 100% lower. Nobody is saying that. Ain't gonna happen, right? So the prices, that increases that we have experienced over the last 3 years are kind of like now, like, yeah, they're in the economy. They're in contracts, they're in salaries, they're in our mindsets, they're in our expectations. They are the basis of like our expectations for the future. Everyone is going to want a salary increase on top of whatever they have looking out into the future. Nobody is like, well, I think it'll be good for the economy if I took a pay cut. Yeah, nobody is saying that. No supplier, no business that has lifted prices is going to say, you know what? Yeah, I think I'd like to take less and sacrifice for the economy. Yeah, no, nobody is going to do that. So the prices from 2020, 2021, 2022, yeah, they're kind of like locked hard into place. And I mean, it's clear that the Federal Reserve will probably act if like, it starts to move much higher. But they've raised rates from 0 to 5% to fight inflation. It's clear that you know forget rolling things back. They're just trying to keep like, the economy from being too strong, which would lift prices even higher. So the likelihood of lower rates, in my judgment, like significantly lower rates, which is like, what some people expect, which is like, we'll go back to something near whatever, 2%. In other words, a hefty, big cut in interest rates. Yeah, I just don't see the environment for that. Why? Because our expectations and mindsets and businesses, they're all set based on the new price structure. And from here, everybody wants more. So right now, it's just a tamped down job by the Federal Reserve to be like, okay, let's like just keep this like here. Can we keep this here? Which is why, while inflation shows 1 or 2%, we can't roll things back, right? And then, of course, we have the issue of the government spending like crazy, right? Flooding the economy with money, with deficit spending. So we've got, plenty of things to keep inflation like kind of locked in at the rates, that absorbed all of the price increases from like, 2019 onward. In other words, all those COVID lockdown shortages that facilitated price increases, yeah, they're here to stay. They're here to stay. And yeah, there's nothing that's, likely to kind of change that. In that environment, what are the kinds of businesses that do well? Well, the businesses that do well are, you've got pricing power. And pricing power doesn't mean that you can lift prices, because when you lift prices, usually you lose customers. So pricing power means that you lift prices and you still keep your customers. Yeah, when you start to like screen out companies like that, yeah, there's so many substitutions that are available. Yeah, people think that these consumer staple stocks, the thing is that there are generic brands, there's substitutions. It's quite hard to raise prices and not lose customers. So if you can genuinely raise prices and not lose customers, okay, that business, yeah, I mean, they're going to do well. Because why? Well, I mean, they can, because irrespective of whatever price they charge, yeah, they're keeping their customers, so they can lift their margins. And that will offset higher interest rate, higher debt costs that are sort of like traveling through the economy, traveling through these companies' balance sheets a little bit at a time. Remember, the Federal Reserve raised rates from 0 to 5%, but companies, bonds, etc., they mature. Some of them mature in 3 years, some of them mature in 5 years, some of them mature in 7 years. So in other words, this margins and profitability is slowly going to be squeezed out a little bit at a time from company after company after company. All right. And as they have to refinance their debt or else save money to pay down their debt, yeah, what does that hit? Well, it hits buybacks, it hits dividend increases. So now you can kind of see like why, if you're buying in at the highs for like these dividend aristocrats, safety stocks, etc., well, there's a grinding future that's coming ahead, because those are the companies that really gorged on debt from like 2009 all the way till 2020, just absolutely gorged. They have massive amounts of debt. And those stocks do not reflect this grinding future. All right. The second type of company is our kind of company that succeeds in a period of like, yeah, where you've had inflation, prices rise. Why? Because of innovation. Well, I mean, innovation means that you provide something to people that is, when you take everything into account, it's cheaper, it's more convenient, it's more accessible, allows you to do more things, it's more efficient, it's more productive. And as a result of that, you take market share from somebody else. Great examples of this are, for example, fintechs. Right? I mean, I just looked through my bank account, and I have service fees for not having a balance of $500. And each time I see one of those, it's just like it just eats me inside. In other words, you're just taking money from me for nothing. Contrast that to whether it's Block or PayPal or any of these new fintechs. Yeah, I mean, they don't charge you anything for anything like that. It's way easier to operate those things. Their apps are awesome. You can move money around. So in other words, cheaper, more convenient, more accessible in terms of my whole life. It's quite easy to operate. If I want to send money to my kids, it's instant, versus the old school way, which is much, much harder. Another example of this is like of an innovation is Tesla. I mean, Tesla can cut prices. Why? Because as they increase production, their costs are going down. So despite cutting prices, they still have the highest profit margins in the auto industry, right? I mean, so that you have to just think that through. Like, they've been cutting prices, right, for like the better part of like almost a year, and they still have the highest profit margins in the auto industry. And as they cut prices, what are they doing? They're grabbing market share. They're grabbing market share. Ford and GM and legacy automakers from anywhere cannot compete. Cannot compete. So this is an example of that. And then the third type of business really that can thrive is that, like, hey, you've got something that's scarce. Like, I mean, in other words, you can shrink your your shareholder base down, or oh, there's absolute scarcity like Bitcoin. So those are the places, where I would say, in my opinion, in my judgment, where yeah, as 2024 sort of like rolls out, and I'm not expecting like these bubbles, in semi stocks, big tech stocks, safety stocks, dividend stocks to explode higher. Instead, you can expect like a slow grind down. Why? Because the effects of higher interest rates will hit these companies slowly. Companies are sitting on a lot of cash, so they can absorb some amount this short term. But if you've got 15, $20 billion worth of debt, I mean, and you're going from having paid whatever 1 or 2 or 3%, and now you have to pay 6 or 7 or 8 or 9%. Yeah, that's a big shift. And you got to get that money from somewhere. You got to raise prices, cut costs, do something, take market share. And if you can't do those things, well, then you're going to have less and less profitability and your stock is going to get hit. Obviously, then you don't have money for buybacks, which is what been keeping many of these stocks at highs. They can't raise dividends, and that all draws sellers. Bottom line, yeah. On the other hand, what we're invested in HG Digital Media is, yeah, innovation. And the idea here is that these companies have something new that offer a better value proposition than the incumbent, than the legacy maker, provider of whatever service. And it is cheaper. It is more accessible. It is more convenient. And people shift to it. And yeah, initially it's seen as like, oh, this is no big deal. But when you consider that for legacy and incumbent companies, their costs are rising and they have nothing to offset it. For innovation companies, because they're built on digital platforms, because they can, I don't know, as like more people come in, it gets cheaper and cheaper. If you built a digital platform, and as you absorb more and more people coming to use it, the digital platform is more or less fixed. That cost is fixed. So more people means like it's cheaper and cheaper. So you can cut costs relative to the incumbent, take market share, and your profitability still goes up. Now, hey, is that a guarantee? No, but we've seen this before. It's happened in history before. This is the cycle of innovation. And then, of course, these companies have higher growth because they're taking market share. They have better profitability. And what does that drive? Well, it drives people to come in to want to buy the stock. Now, these innovation growth stocks have just been brutally smashed now for 3 years, but they're cheap. Yeah, they're growing. And the reason why their stocks have been smashed is not because everybody's been buying, it's because people have been selling. People have been selling, handing over cheap stock. So, hey, that's where things are. All right, want to go quickly to the Bitcoin ETF because there are some crazy things that are going on here. Where is my Bitcoin ETF? All right, this is the Bitcoin ETF. Let me scroll this up here to see the overall numbers. Yeah, the Bitcoin ETF launched in about January 10th or so, and since then has taken on nearly $5 billion. Yeah, I mean, so this is the fastest launch of any kind, I believe, in ETF history. I mean, taking in $1 billion in a month would be a lot. Taking in $5 billion is just enormous. But even more important, and why I want to bring this up, is look at them just gobbling up Bitcoin. For context, right? Okay, so Bitcoin, as all of you know, there's a max supply of 21 million coins that can ever be mined or produced. That's the max supply, right? Of that, about 19.5 million have already been produced, right? And every 4 years, the amount of Bitcoin that is produced per day, whatever cycle you want to consider it, gets halved. Right now, we're producing about 900 coins per day, 900 coins per day. And come April 17th or 18th of This year, it will get half to 450 per day. So we're going from 900 to 450 per day. So let's just look. I was going to scroll down. Just look at the Bitcoin flows that are going in each day, right? I mean, it's an extraordinary amount. I mean, essentially, the two biggest uh, uh, ETFs, which are BlackRock and Fidelity, by themselves are effectively more than doubling or tripling the total amount of Bitcoin production per day. I mean, so as more money flows in, and then in April, we've got this halving that cuts the supply by half, where are they going to get the Bitcoin from? Right? This is happening at the same time where the amount of Bitcoin that is just being held like this, like for example, at ATG Digital, we've kept the Bitcoin from our Banyan Hill days. I believe I put GBTC, which is now an ETF, into the portfolio in January or so of 2020. I don't remember exactly, approximately then. Yeah, we're not selling our Bitcoin because why? Because it's incredibly scarce. And now there's crazy high demand for it with this ETFs. I mean, in the past, we never had something that could take in billions and billions of dollars, in like a month. I mean, before to buy Bitcoin, you'd have to open up a Coinbase account, or you'd have to do you had to deal with wallets and everything. Yeah, now you can buy it in your IRA, completely, normal, nothing special required. You could do it at Robinhood or at Schwab or at Fidelity. You can just buy into any one of these things. So massive demand. Now a platform exists for massive demand. So when the Bitcoin ETF, I mean, let's say, it's what, a month and 11 days into this, we're 5 billion in. Yeah, I mean, with each passing month, with demand continuing to come in, supply right now is is already like not enough, but it's going to crash. The supply is completely going to crash. And what will that happen? Well, economics 101, which says, supply and demand. So if the demand for something keeps rising and the supply goes down by half, price rockets up. That's economics 101. So yeah, I mean, I feel pretty good about where Bitcoin can go in the current cycle. I put out a very long post on X about having studied the 2012, 16, and 2020 halvings, and looking at two things, the demand and the supply. The one thing is very clear. In the 2024 thing, the big thing that's even bigger than the halving is the demand. The demand is now institutional. The demand is now global. There's talk of a Bitcoin ETF in Hong Kong, in Singapore. In other words, yeah, the Bitcoin ETF acts as like this huge hoovering mechanism to take money from sort of like existing finance and send it into the crypto world. We've never had that. We've never had that for Bitcoin. We've never had that for crypto. And if I'm right, yeah, I mean, the Bitcoin ETF is very rapidly going to become, yeah, first it's going to get to 10 billion, then 20, then 50 billion, then very rapidly 100 billion. Why? Because, well, yeah, once the halving comes and the demand keeps rising, the price will jump. So yeah, I mean, what is everyone attracted to? I mean, what are all of you attracted to? Well, we want price increases, right? I mean, that's what. So generally, as prices rise in financial markets, yeah, people come in, they pile in, they want part of that. They're like, oh, it's going to go higher. I want in. So yeah, things are looking, very, very, very good, in my opinion, in my judgment, for Bitcoin, and generally speaking, from the crypto economy. I mean, Ethereum just recently passed 3,000. Why? Well, because money's flowing through, money's coming in through Bitcoin, and it's essentially providing liquidity to the entire crypto economy. And if I'm right, this is going to continue, I'd say 12, 18 months. I did a study on Bitcoin. I'll do an ETF. Maybe I'll do it on Friday, where I'll show you my quote unquote model. It sounds fancier than it is, but essentially just a study of price and dates as to what happened in previous cycles. And there is clearly like a kind of like a rhythm and a kind of like a pattern to this. And that has happened in the 2012, 16, and 2020 cycles. And I'll present that on Friday. Yeah, I'll do it on here rather than X. Yeah, subscribe and, put those notification things on so you know when it comes on. But things look very, very good here. All right, finally, want to give you an update on this video, which I did in May of 2023, right? So number one, Risky Biotech was the title of the biotech stock was the title of the video. And it was on IDYA, which is Idea Biosciences. I had the performance up for it, but I somehow clicked off it. But yeah, the stock is up, I believe, something like 60 or 70% since I put it since I made this video, and this fits a broader theme, which I've told you about, which is that we are all inured to the idea that tech is going to sort of like dominate markets, because it's dominated markets in many ways, at least like, for me, for the last 15 or 20 years. I mean, because, after the internet, and then, that's like sort of really been like the moving force behind everything. But when I look at biotechnology, genetics, healthcare, telemedicine, the use of artificial intelligence and all these things, yeah, the prospects here are far better, in my judgment, my opinion, than they are in technology, where, so much of, if even if everything turned out like exactly perfectly, so much of that is priced in. Those stocks are at very high levels. But you look at biotechnology, you look at healthcare, yeah, not priced in. And Idea Biosciences has like a couple of drugs that, like, they're involved in a type of drug that's called synthetic lethality, which is, yeah, it's very new, and essentially, I mean, it would take a lot for me to like explain the biotechnology aspect of it, but one of their drugs apparently might work in 15% of all solid tumors. Yeah, I mean, 15% of all solid tumors. So I went and looked up the solid tumor market, for drugs. It's like 800 to 900 billion dollars. So let's see, 800, 900 billion. So 10% would be 80 billion, so, and then half of that would be, so it's $120 billion market that it can potentially be there. And why have any confidence that, Idea Biosciences can do it? Well, when I made that video in May, it was because they had released a study on a drug that showed extraordinary results. It worked, and I forget, like 60% of people, and it provided like, a level of benefit that, was thus far unseen. That created initial excitement. But they have a second drug, which is earlier in testing. That's the drug that has potentially works in 15% of all tumors. They own this drug free and clear. And I believe that's the reason really why, like, pretty much like there's never been like a big seller. Like nobody wants to give the stock up. Now I could be wrong. And hey, biotechnology stocks are crazy risky. Remember, Idea does not have, any revenue coming in. They live off investors. They got to keep doing deals. But still, yeah, clearly, in my judgment, my opinion, someone, like big money thinks that like, Idea can be a very large stock off the initial drug that I made the video on, or this second drug that has the potential to work in 15% of all solid tumors. Yeah, I mean, $120 billion market for one company with a drug like that. Yeah, I mean, that could be really huge, really huge. And I believe that's why there's been like, I mean, this has just been relentlessly higher. It's just like it's been bid up every day. And I was like, what is going on? What is going on? All right. That is sort of like the full update for today. I went very, very long, but I wanted to get as much of this out there as I could. Want to mention that Dean is running a book giveaway using our Substack through my Facebook page. So if you're interested in that, you can check into that. And quickly, I'll do some questions here. Pulverizer says, I haven't used PayPal in ages. Everyone just takes my credit card now. Well, Pulverizer, everyone is not you. There are a lot of people in this world, and you're welcome to go look up the statistics for PayPal and Block, and you will see massive growth in transactions. Pulverizer also says, so would that mean Bitcoin mining operations will be shutting down if they can't mine enough to make it profitable? Well, remember, the price goes up as well, right? So, so some of the weakest ones will definitely get shut down, which is why at ATG Digital Media, we have pretty much cleared out all the smaller ones. We owned a lot of those when we moved from Banyan Hill. We cleared them out, and essentially we just really own two of the miners, which we believe are the strongest that will make it. It doesn't mean that the other ones won't make it. It's just that we want to give ourselves the highest chance. And remember, there's going to be a cycle. I mean, associated with that, because over time, I mean, the miners will have to sell Bitcoin to pay the bills, and so there will be like a cycle through this. These are not like pure buy and holds forever. You definitely have to ride the cycle up and down. In the comments is a link to the Substack. Since there's no other questions, subscribe, because like I said, I will present my Bitcoin model and, show you, like, I believe there's a really good chance that Bitcoin is, I mean, I've said $1 million in the past, but I'd say, I think that's like that. That's on the low side. I mean, that's on the low side. I mean, the high side would be $2.5 million. But come back on Friday, and I'm going to put my model up and show you all of my, price and dates and how I came up with this. But I mean, I would say the chances are really, really good in my judgment, in my opinion. All right, thanks everyone for tuning in. Subscribe and check into the book giveaway that Dean is running on our Substack on my Facebook page. Bye everyone. See you soon.